You might remember a chart or a diagram that I put up last year. In fact, it was December the 9th, 2023. And when I put this up, there were quite a lot of comments and a bit of argument and discussion about it, but I'm adhering to this plan. And it also explains why my natural gas trades are long at the moment. Let's have a look at what we've got going here. So basically, I've ranged this chart into several different levels, looking at data going back about 20 or 25 years. So I've got the dollar store, the bargain store, a good deal, not cheap, ouch, and Saks Fifth Avenue, the most expensive. Look at where these levels are. The dollar store is below $2. So the dollar store starts at $2. The bargain basement between $2 and $2.50. A good deal between $2.50 and $3. Not that cheap, above $3, and you can see up to about $3.50. And then after that, it gets more and more expensive. Whilst we're in any of these three zones at the bottom here, the dollar store, the bargain basement, and the good deal zone, I'm looking to buy natural gas. Above that, in the not cheap, ouch, and Saks Fifth Avenue levels, I'm looking to sell natural gas. That's my overall idea. Now, there are exceptions to that, of course, depending on extreme moves and maybe political events and weather events and shutdown events, even geopolitic type bombing events like we've seen quite recently. So there can be adjustments to this approach. But overall, that's the way I trade this. So we're now currently below $3, actually closer to $2. So I'm a buyer of natural gas, all the way down to below $1.50. The lower we go, the more interested I'm buying natural gas. Once we get above $3, I become more cautious and I start to consider the short side. Because the price has been so low for so long, I've generally been more of a buyer than a seller. But over the last 12 months or so, on about 30% of the occasions that I've taken trades on natural gas, I've been short, not long. Right, having said all of that, and considering the fact that we are closer to $2 than $3, I'm looking to buy natural gas. And I will stick to that strategy until we get above $3. Having said all of that, let's look at the chart. This is the day chart on the Henry Hub. You can see we're at $2.02. A little bit of a bounce there. We'll zoom into the 4-hour chart shortly. Don't want to spend too much time on this because we've talked about this in 2 live streams and 2 videos this week already. But we're in this order block zone. This is the Henry Hub day chart, and we're extremely oversold. We're looking to buy, and we're below $3, much closer to $2. And as I said earlier, the cheaper, the better if you're a natural gas bull. Let's have a look at the 4-hour chart on the spot price over at Pepperstone. You can see we've broken back into this channel. We're still above $2. We did actually touch 198, so 2 cents down. And for the last 4 hours, we're going sideways. There is no impetus to rebound at this stage. There are no reversal candles, and I'm waiting to add an extra long position to this trade. I'm not willing to do that at this point until we get a clear reversal candle. That candle could mean that we have to go below $2. We might have to get to 180, 190, somewhere around there. And in an extreme event, we might have to get down below, say 160, down towards 150. Once again, I don't think that's the most likely scenario. I was chastised by one of my members yesterday who said that I had said that it was extremely unlikely that natural gas would get to $2 or below. If you've been watching my videos, you'll know that I've never used extremely unlikely. I've always said it's not my best case scenario, or I don't think that's the most likely scenario. I've always said, however, that I do think there's a possibility we could get to $2 or even $1.90. And I'll say at this stage, there's still a possibility we could get to $1.50. Once again, I don't think that's the most likely scenario, but I always keep those possibilities open for the purposes of sizing and risk management. Now, if you're looking to day trade natural gas using highly leveraged instruments like Boyle and UNG and coal, then you should not be looking at these big swings. I tend to swing trade natural gas. I try to remain long as we're below $3, and generally above $3 I remain ambivalent, perhaps looking more towards the short side. Looking back over all the natural gas trades I've taken on the futures over the last 12 to 18 months, I've been about 92% profitable, and I've been long about 70% of the time and short about 30% of the time. The directional bias towards the long side is simply because we've been at and around about $2 for quite a long time. Well, I hope that helped. I'm looking for a reversal candle at and around about the $1.90 to $2 levels, and I'll be looking to add to my long position on natural gas. That will bring my average price back down to about $2.20. I'm happy with that, and I'll be looking for a move back up to about $3, maybe $3.40, $3.80, and above $4 towards the end of the year. Take care. If you enjoyed this video, I'd love your subscription, and I'll see you in the next video.
Natural gas on fire, big when my heart desires. Contango, tango, beat, hitting bids on repeat. Leverage boil will go, riding rips, so bold. Hedging bets in the night, trading futures take flight. Markets wild, trading fast, bet the winnings won't last. We take risks, heavy toll, but the trade keeps us whole. Pipes and charts in demand, holding strong.